You can mark hundreds of levels on a chart, but that doesn't mean every one of them is important. The real question is, which levels are actually worth paying attention to? That's what we're going to look at in this lesson. Key levels are simply important areas on the chart where price could potentially reverse or continue from. But it doesn't matter how perfectly you draw a level. There's never a guarantee that it's going to hold. That's why we always wait for confirmation. I'm also going to show you how I use top-down analysis to find these levels and put everything together. We're mainly going to pay attention to support and resistance levels and fair value gaps or imbalances. A resistance is an A formation. This is created when we have a bullish candle followed by a bearish candle. The closing price of the bullish candle becomes our resistance. A support is the opposite. It's a V formation created when we have a bearish candle followed by a bullish candle. The closing price of the bearish candle becomes our support. You can see both of these on the line chart. When resistance breaks, it can later act as support. And when support breaks, it can later act as resistance. Then we have what we call the left shoulder pattern. When we have two candles moving in the same direction, the closing price of the first candle can also be used as a key level. These levels can later act as support or resistance. And finally, we have fair value gaps or imbalances. These are created when price moves very aggressively in one direction and leaves an imbalance between the candles. These areas can also be used as key levels. If price trades completely through a fair value gap, that same area can later be used from the opposite side. This is what we call an inverted fair value gap. Now that we've gone through the different key levels, let me show you how all of these actually look on the chart. Let's start with a resistance. So a resistance is an A formation. When there's a bullish candle followed by a bearish candle, the closing price of the bullish candle will be the resistance. So you can see how price later used that area to push price lower. And a support is the V formation, and it is formed when there is a bearish candle followed by a bullish candle. So the closing price of this bearish candle will act as a support. So you can see how that level was later used to push price high. So a resistance acts as a ceiling and a support acts as a floor. And then when a resistance breaks, even this right here was a resistance. When a resistance breaks, it will later be used as a support. So price traded through it, retraced back down into it, and then it started pushing higher. So the same thing happens when a support breaks. So this right here was previously a support, and when a support breaks, it can later be used as a resistance. And then we have open close levels, or else when two candles move in the same direction, the closing price of the first candle will act as a key level. For example, here we had this bearish candle and then we had this bearish candle. So the closing price of this first candle can be used as a key level. So you can see how the next candle tapped into that closing price and started pushing lower. So even this right here will turn into a key level. That level can later be used as a resistance, and when it breaks, it can be used as a support. Even here you can see two candles in the same direction, so the closing price of the first bullish candle can act as a key level. And then we have fair value gaps or else imbalances. These are formed when price moves aggressively in one direction, like for example here. You can see how the market pushed lower very aggressively, and that left behind an imbalance inside this candle. So price can later trade back into it and use that area as a resistance to push price lower. So here's another example right here. There was a strong move to the upside, leaving behind an imbalance inside this candle, and that level can later be used as a support. And when price breaks through that support, it can later be used as a resistance, or else when price trades through this fair value gap, then it can act as a resistance, or is this what we call an inverted fair value gap. Now that you know how these key levels look on the chart, The next thing is understanding which ones actually matter. Because if we just start marking every support, resistance, and fair value gap we see, the chart is going to become a mess. This is where top-down analysis comes in. We start from the higher time frames to understand the bigger picture, identify the important key levels, and then slowly work our way down to the lower time frames. Let me show you how I do that. Now keep in mind that the examples I'm about to show are all hindsight. When price was actually moving here, I didn't trade everything perfectly. I made mistakes and sometimes I even got the direction wrong. But when we go back and study the chart, we can clearly see what we missed and learn from it. The point of studying old price action isn't to pretend everything was obvious at the time. It's to understand the mistakes we made so when we see similar price action again, we're better prepared for it. So with that being said, let's start. So first of all, we're going to look at market structure. We can see a strong move to the downside here and then a counter trend like this. And then that counter trend was broken. So price was creating high highs and high lows. And now we see a break of structure. So market structure is the foundation and market structure is what we normally use to identify the direction. So once you see this break of structure, you know that the market is currently bearish. It has reacted to this open close level on the daily time frame because I told you that when there are two candles in the same direction, the closing price of the first candle can be used as a key level. So price has now reacted to that. It has failed to run above this high and now it has broken structure. So this tells us that the market is currently bearish. Then we can drop one time frame lower, and when price starts pulling back, that is when we can start drawing our key levels. The first two 4-hour candles are in the Asian session and I do not personally trade the Asian session. So currently price is here and we can draw our Fibonacci from the previous lower high to the new lower low and then mark out key levels that are at or around the premium price. Now, if you start marking out every single key level, you're going to see so many, right? You have this support that was broken, so now it can turn into a resistance. You have this open close level here, you have another open close level here, so you're going to make your chart very messy. So the best thing to do is mark out key levels that are at or around the premium price. So we have this key level here which is slightly below the premium price, which is okay. And then we have a left shoulder right here, which is also a good key level. And we have more levels up here, but if price goes there, we can mark that out. We don't have to mark hundreds of key levels on the chart. Just mark out the key levels that are close to current price. So we have this resistance here and we have a new resistance up here. Then we can drop down to the lower time frames and see how price is reacting to these areas. We're not going to just directly place a sell limit here. We're not going to do direct entries from these levels. We will wait and see if price is confirming that this level is going to hold. So we go to another lower time frame, like the 1 hour, and we wait for the London session to open. Now, I avoid trading the Frankfurt session as well. And here comes the London session. So the London session opens right here. Let me use this indicator so we can see the times. And there it is. The London session opened right here. This is 3 a.m. New York time. So that's the London session. And now we wait to see what price is going to do. So it moves up. Now we're back inside of this key level. And there it is. It has now gone inside of the key level and the liquidity is taken out from the Asian highs. Now keep in mind that you have to always monitor the candle closings. You have to know at what time your 4-hour candle closes and at what time your 1-hour candle closes and all that. So every time a candle closes, a key level might be created. So you have to monitor that time frame. Now if we go to the 4-hour, we can see that the Asian high is taken out and we are currently inside of a daily resistance. We know that structure was bearish. We're mainly focused on sells. So let's see what the lower time frames are showing us. If there are no opportunities present in the first 2 to 3 hours of the session, I call it a day. So the London session is here. So during the London session, we can see some slow price action. We don't see anything interesting. And this is where the New York kill zone opens. So if you haven't watched the previous video, I have mentioned all the times. You can check that out. So this is at 7 a.m. New York time. So when the New York kill zone opened, it wiped out the London high and it closed below the daily resistance. So now we can drop down to a lower time frame to see if we have any confirmations. So on the 15-minute time frame, we can see a breakout structure. Right here, we had a high and a low, a higher high and a higher low, a new higher high, and then we have a breakout structure right here. So now we know that higher time frame structure was bearish. We are reacting to a daily resistance, and now structure is broken. So this is where we can start looking for entries. So there are different entry techniques, but we're not going to go into entries yet. I'm just showing you how we can use these key levels and how we know if these key levels are going to hold. So once you see the breakout structure here, you can place an entry. Stop loss can go above the high that wiped out the liquidity, and you can target the next closest pool of liquidity. So in this case, the next closest pool of liquidity would be the London low. And this is gold, so you can see that your stop loss is around 200 pips, which could be a lot. So what you can do is look for key levels that are close to the daily resistance. So here we have an open close level on the 1 hour, and we also have a resistance on the 1 hour time frame. So what you can do is, if you want to make your stop loss tighter, you can enter at the 1 hour resistance and place your stop loss above the high that wiped out the liquidity. So you have like a 140 pip stop loss, and your first target is going to be the London low. So let's see what happens. So the New York session opened right here. This is at 8 a.m. New York time. It opened and it moves up into that daily resistance and the 1 hour resistance, and let's see what it does. And there we go. So this is where you pay yourself, because as intraday traders, you have to make sure you pay yourself at the intraday targets, and the rest can go down into the next major pool of liquidity, which could be the Asian low. So like I told you earlier, with every candle closing, a new key level might be created. So now the current 4-hour candle closes, so you can go to the 4-hour time frame to see what has happened. And on the 4-hour time frame, we can see that price moved into the daily resistance, and we have a strong engulfing candle, and this candle created more key levels. So on the 4-hour, we have a new key level, which is this open close level, and we have another open close level up here, even a resistance up here, but I'm going to pay attention to this for now. And look how the market reacts to these levels. Once again, it breaks, uses that area as a resistance, and then price starts moving lower. So then we are done with that day. So we can go to the 4-hour time frame and the daily time frame. So every new day, we pay attention to the daily time frame. So we'll start on the daily. And what do we see on the daily? We can see that they are respecting the resistance that was on the daily. You can see a small rejection. We'll have that same level still marked out. We have a left shoulder right here. And then a new support is created on the daily. So we are going to pay attention to this because it's a daily support, and price might give small reactions from this area. And then we go back to the 4-hour time frame. Structure has not changed. We are still bearish. So let's see what price is going to do. So the first candle is the Asian session candle. We don't trade that. The second candle is also from Asia, so we do not trade that either. So now we can see that price has gone back inside of the daily resistance and it has closed below it. So since we are bearish, we're trying to see if we can still get in on some short positions. We go to the 1-hour time frame and we do the same exact thing. Now, if this trade was at break even, you would have got stopped out at break even. The Asian session is over. This is the Frankfurt session, which I don't trade. And now this is when I start trading, when London opens. Now what I'm expecting is to see if price can move back into this area and give us a confirmation like this. This is where the London session opens. It did not tap into this, not yet, and not yet. We haven't tapped into this key level yet. So we don't take any trades as of now. A new 4-hour candle has closed. So let's see what happens. And on the 4-hour time frame, we can see that a new resistance is created. We have this open close level right here. So don't worry about having all these key levels marked out, because you're not going to place entries on all of these. You see which levels are actually giving you a confirmation. So we can have the new 4-hour level marked out and we can stay on the lower time frames. So the London session did pretty much nothing. If you go to a lower time frame, you will see a consolidation. Price did not really start trending. So let's see if the New York session can provide any opportunities. So not yet. And here comes the New York kill zone. So during the New York kill zone, it moved into that 4-hour resistance, which was here. And on the 1-hour time frame, we are seeing a move to the downside. So let's see if the lower time frames are confirming. You can use the M15 as a confirmation, or you can use the M5 as confirmation. On the 5-minute time frame, you can see all these breaks to the downside on the line chart. So for confirmations, you can use the line chart or you can use the candlestick chart because both of them are showing structure. So you can see a break of structure to the downside after reacting to that 4-hour level. So which means we have a confirmation that this resistance may hold. Then what we can do is place a trade. So there are once again different ways how you can take the trade. You can enter directly with your stop loss above that 1-hour candle's high, or else you have a new resistance here on the 1-hour time frame, an open close level. You can even take your entry from that newly created key level on the 1-hour time frame like this. Your stop loss goes above that high and your target is going to be the London low once again. And if it holds, then you're going to target this swing low right here. So let's see what happens on a lower time frame. There it goes. Price taps right into that 1-hour key level. You don't really need this much precision. As soon as the next 1-hour candle opens, you can just sell it with your stop loss above this high. And then you target the London low and eventually the swing low. You pay yourself down at the London low if you are an intraday trader. And then the rest can go into the previous daily low, which is all the way down here. Or else you can even target the next daily support, which was here. But anyway, that's a good trade. So we do the same exact thing. Even right here, it's the same thing. We saw how price moved into a daily resistance. New key levels were created and we saw how confirmations were given. So once the confirmation was given, we enter stop loss above that high and we target the next pool of liquidity. So mainly the trade is based on market structure and that high time frame key level. So we do the same exact thing here. During the Asian session, it tapped into the daily resistance and price moved down. And during the London session, a new key level was created on the 4-hour time frame, which was the open close level. And when the New York kill zone opened, we saw that price was breaking structure to the downside, giving us a confirmation. So when the New York session opened, we sell it. Stop loss is above a safe high. We target the London low and we let the rest run into the previous daily low. So there we go. And that's all we need. That is all we need and we are done. So now we go into the next day. So that day is now over. So let's see what the next day has to offer. We start on the daily time frame. Now on the daily time frame, we can see that new key levels are created. If you go to the line chart, you can see that the previous day we marked this area out as a support, but when a support breaks, we can mark it out as a resistance. And then we have another key level up here, which is the resistance, a bullish candle followed by a bearish candle. So these are the two key levels that we're going to pay attention for today. And structure is once again broken to the downside on the line chart. So we are expecting price to move down into this external range liquidity. Or else we're expecting price to move down into this low and to create a new lower low. So let's see. The first candle will be during the Asian session, which I told you I did not trade. And the second candle is also during the Asian session, so we don't trade that either. So what are we seeing on this day? We can see that the market has moved into a daily resistance, and on the 4-hour time frame, a new resistance is created right here. So then we go down to the lower time frames and see if price can confirm that this level is going to hold. We need to see a lower time frame breaking structure to the downside. Let's play the candle. This is during the Frankfurt session, which we don't trade, and then this is the London session. So price has not yet gone into this, so we're not taking any trades. So make sure you don't just randomly look for break of structure. You wait for a break of structure when price is inside of a key level. That is the purpose of marking out a key level, because a break of structure can happen anywhere. But if it happens inside of a key level, that is when it is important. So we don't see anything yet. Price is now back inside of this key level, and 2 hours of the London session is also gone. So I'm going to wait for the New York session. There was nothing here during the London session. We go to the 4-hour time frame, and what are we seeing here? We can see that this candle never tapped into the previous candle, which is fine. And now we have new key levels on the 4-hour, which is this open close level. And you can even mark out this open close level here. So currently these are the key levels we have on the 4-hour time frame. The problem here is which of these key levels are we going to use? And it doesn't matter because you're not going to place a direct entry here. And if it loses, you're not going to place a direct entry here. You're going to wait for a confirmation from one of these areas. Then let's go to a lower time frame and wait for a confirmation. Let's see when price is reaching that area. So this is when the New York kill zone opened. The Asian low is already taken out and price is showing us a small reversal sign. Now when price goes into any of these areas, I'm trying to look for a short position. So let's see. It goes into these key levels and we can see a strong rejection but we have to wait for a break of structure on the line chart or on the candlestick chart. So at least this low has to break, because this is the higher low that created the most recent higher high. So if this breaks, we might have a confirmation that price wants to go lower. So let's patiently wait for that breakout. We don't see that yet, and there it is. It starts moving higher. This is the reason we wait for confirmations. So there were no confirmations here, so we did not take any trades, and price just started going straight through those levels. So we did not take any trades. There were no trades on this day. So let's delete all the levels and let's wait for the next day. So we start on the daily time frame once again, and it looks like price is slowly moving up, and we have new key levels. So I'm going to keep this level marked out as the resistance, because this is a fresh level. Price has not tapped into it yet, so these levels are more important. And we have a new support down here, because earlier it was a resistance, and when price breaks through it, it turns into a support. And then we have a left shoulder here, and we have a new support right here. So we'll have all the levels marked out, and let's see what price actually does. Then we go to the 4-hour time frame, but keep in mind that the main breakout structure here is still bearish. This is the most recent breakout. These are also valid breakouts, but this candlestick breakout is much clearer. Then we go to the 4-hour, and this is what happened during the Asian session. It just broke straight through these daily key levels, and it has even broken structure to the downside, and that is the second Asian session candle. So now we know that it has broken structure to the downside. It has gone straight through this daily key level. So now is a chance for us to look for shorts. So we have new key levels on the 4-hour that are close to the daily, and it is the open close level here. We have more key levels right here, an open close level here, and an open close level here. So let's see if we can take any short positions from any of these areas if the lower time frames confirm. So this will be the Frankfurt session, and then let's wait for the London session. So I think during the Frankfurt session, price may have given us a confirmation, but let's see if the London session can trade back into it and then give us another confirmation. So it's tapping into the daily support. We don't see anything yet. Still tapping into the daily support. Tapped into the 4-hour resistance, and we are seeing a small rejection. Now let's see if the lower time frames are breaking structure. It has not yet broken structure, and around 2 to 3 hours of the London session is now gone. I'm going to step away for the London session, and I'm going to start trading the New York session. So a new 4-hour candle has also opened, and we have a new key level right here. So let's see what the New York session does. This is still the London session, and this is when the New York kill zone opened. So I'm more interested in a sell. I'm not interested in a buy. So what I want to see is price trading into that new 4-hour key level and giving us a confirmation. And we are seeing a move to the downside, but we don't really see any confirmations. And we also have a new key level on the 4-hour time frame, which is right here. So let's see what the market is going to do. Now it goes into that key level, and let's wait for a confirmation. If price can now break at least below this low, we know that we have a break of structure, and then we have a confirmation. So let's see what price is doing. There are no breakouts. And now it is too late in the day. So after at around 9 p.m. my time, I just close the charts. I'm done. So there are no trades here. So let's see what we have on the next day. Both of these days were consolidating during our trading windows. The Asian session moved on both the days, but you can see that the London session and the New York session were slow on both of these days. Then let's see what happens on the next day. We go back to the daily, and you can see that daily has rejected this daily support. Just because it ran below this wick, it doesn't mean that the support is broken, because price never closed below this area. Only if it closes below this area, this support would turn into a resistance. But right now we can say that price has respected the daily support. And we also have a new resistance here on the daily time frame. So let's see what happens. Let's wait for the Asian session to end. So this is the first one, and this is the second one. The Asian session is now over. So what we can see here is that price has moved up, even broken structure on the 4-hour time frame, and it has broken above the daily key level. So now we have to wait until price closes below the resistance if we're going to look for any shorts. Let's see what price is doing. This is the Frankfurt session, and this would be the London session. Now, since this resistance is broken, it might even act as a support, but until the daily candle closes, we don't know if this is broken yet. So let's see what happens. A new 4-hour candle opens, and we have a new support created on the 4-hour time frame, which is created as a result of price rejecting the daily resistance. It was broken, price then used it as a support, and a new support is created on the 4-hour time frame. So let's see if we can take a short scalp from here up into the next daily resistance, which is up here. If you know how to work with the key levels, you can even trade the counter trend. So let's see. We're going to wait for the same exact thing. We'll wait for the New York kill zone. And there it is. This is the New York kill zone. And we are inside of the 4-hour support. So let's patiently wait and see. There it comes. Now it has taken out the 7 a.m. low. This is the New York kill zone low. And that low is taken out. So I'm waiting for a confirmation. If price breaks above this, we know that the market structure turns bullish and we will have a buy confirmation. Yeah, we do have a breakout. So now what we can do is wait for a pullback and then a move into the next daily resistance, which is up here. We have to make sure we move it to break even when price takes out the next major pool of liquidity, because it might even reverse without tapping into this area. Yeah, it did not come down into the entry, but it starts moving higher. And there it is. It goes into the daily resistance. So it did not give us any entries, but it moved into the daily resistance. So let's see what happens. So there were no trades on this day as well. And now let's wait for the next day. Okay, so one interesting thing we can see here is that price has gone into a premium price clearly. And once it tapped into that daily resistance, you can see that the 4-hour time frame has broken through that open close level. This may be an interesting sign that price may want to turn bearish, but we have to wait for a clear break of structure to get that confirmation. So we go to the daily and we are seeing a rejection of this daily resistance. We have a new support here on the daily, and we also have a new support right here on the daily. The next fresh daily support can be all the way down here because price has not yet tapped into this open close level. So let's see what price is going to do. As usual, we're going to wait for the Asian session to end and then let's see. So now the Asian session is over. Price has now created a new 4-hour resistance right here. And we can even mark out this open close level here. So let's see if price can go into this area during the London session and give us a sell confirmation. And we can also see that a daily high is taken out. So you know that above daily highs there are buy stops. So when they take out buy stops, and if the lower time frames turn bearish, we can expect price to trade down into sell stops, because when they take out daily high, we expect price to move down into a daily low. So you can see how all of this is coming together. Market structure, premium and discount, liquidity, and now key levels. Key levels are showing us where to take the trade from. So let's see what happens during the London session. This is when the Frankfurt session opened, and when the Frankfurt session opened, it tapped into the 4-hour key level, and let's see what the lower time frames are showing us. And the 5-minute time frame has broken structure. We can see a sweep of these equal highs, and we can see a break of structure on the line chart. Or you can even say this break of structure here. Whatever it is, we have the confirmation. So now when the London session opened, we can do the same thing. Now look how this trade is very similar to the trade we had here. The New York kill zone opened, it tapped into a key level, the 1-hour candle rejected, and it created a new key level here. So this is where we want to take the trade from. And we can do the same exact thing here. It wiped out liquidity, it tapped into the 4-hour key level, and the lower time frames broke structure while the 1-hour time frame created a new resistance right here. So what we can do is take a trade here, and the stop loss can go above the high that wiped out the liquidity, which is up here. And then your targets are going to be the Asian low. This is where you can pay yourself, and the rest can come down into the daily support. And if price breaks through the support, you can even hold it into the swing low. But for now, the Asian low will be the closest target, and let's see what price is going to do. There it is, it taps into it. So you pay yourself here. The next target could be the daily support, and let's see what price is doing. We have a new 4-hour candle right here. So the current 4-hour candle has created a new key level, which is this right here. This was previously a support, and when price breaks through it, it turns into a resistance. And we even have a new resistance up here. So these are the next 2 key levels that we're going to pay attention to. So let's see what price is going to do. We'll wait for the New York session now. So the New York kill zone opened, and it did the same exact thing. It tapped back into that 4-hour key level, and let's go to a lower time frame. On the lower time frames, you can see the same thing. Price moved into it and it broke structure. We had a high, we had a high low, we had a high high, and once it tapped into the key level, we can see a break of structure right here. So we can do the same exact thing that we did here. A new key level was created on the 1-hour time frame, which is up here. So we can place our entry at that new 1-hour key level. The stop loss can go above this high, and we can target the daily support. And if it breaks through the support, we can even hold it into this swing low. So let's see what price does. And that's a loss. So again, just because we took a loss, it doesn't mean the direction has changed. We can still wait for another confirmation from this 4-hour key level here. So let's see what price is doing. And there comes the next confirmation. We can see a sweep of these equal highs, and we can see a break of structure right here. So once again, we can do the same exact thing. We can expect price to move up into, let's say, that same resistance on the 1 hour time frame. Stop loss is above or close to the high that wiped out the liquidity. Target will be here, and then the rest can come down into this swing low. So let's see if it can tap us in. Yeah, it just started trading lower. So that was an unfortunate trade. It stopped us out and then it started moving lower. So that happens when you have tight stop losses and you can't help it. But if you were holding runners on this trade, it is still moving low. And now we can see that the structure is also broken on the 4 hour time frame, which is interesting. Price has gone into a daily resistance and now the counter trend has turned bearish with this breakout. So now we know that the major break of structure here was bearish and the counter trend has also turned bearish after taking out a daily high and going into a premium price. So now let's see what price is going to do. They're tapping into the new 4 hour key level. See, we had a new 4 hour key level here and even a new 4 hour key level here. So that day is over and let's see what price is going to do. So we go to the daily and we can see that there is a new resistance right here that is created on the daily time frame, and the next support is all the way down here. And we do the same exact thing again. We wait for the Asian session to end. So this is the Asian session. This is also the Asian session. So you can see that price broke through this key level during the Asian session, moved back inside of that key level and started moving lower. A new key level is created on the 4 hour, which is here, and another one could be up here. So let's see if the London session can give us the confirmation once again. And since price is trading through these levels, we can even extend these targets down into this. And if price breaks through this, the next target can be this Asian low. And now the London session is about to open. So let's see if we can get any confirmations. There it is, we're inside of a key level and there are no breakouts yet. Price just went through these key levels and it has now taken out the Asian high. So let's patiently wait for a break of structure, because if price breaks through this, it's trading through the 4 hour key levels and we're also getting a break of structure. Now we do have a confirmation here, but it's not happening inside of the key level. It's happening above the key level. So we have to see price closing below these key levels to see a proper confirmation. So I'm not going to take this trade into account. I'm just skipping that because it's not happening inside the key level. And let's see what it does. So a new 4 hour candle opens and you can see that structure is broken. Price respected a daily support and structure is broken here. So maybe this bearish move might not continue because of this bullish breakout. So let's patiently wait and see how price is going to now react to these supports. These were earlier marked as resistance levels, but now it turns into support. Price might even react to this resistance here. Here comes the New York kill zone and we're inside of this. Now we know that the 4 hour time frame has turned bullish and we're inside of a 4 hour support. So let's see if we can get in on a buy move, at least up into this resistance here. Now the 7 AM low is taken out and let's wait for a breakout. There it is. It came back down into the 4 hour support and now we have a break of structure. You can mark it out on the line chart or you can mark it out on the candlestick chart. But anyway, we have the confirmation. And now we have a new 1 hour candle closing and the 1 hour has created a new support after rejecting the 4 hour key level. So let's assume we drew the Fibonacci from here and we placed an entry right here. Stop loss goes below or close to the low that wiped out the liquidity. And the first target is going to be the daily resistance and the rest can go up. So let's see what happens. Oh, it goes straight through it. So we are taking a loss here, which is completely fine. So let's see what price is going to do. Let's see if we have any more trades here. No, it just keeps trading lower. A new 4 hour candle is about to open. So we might have to go back to the 4 hour. The breakout structure that we saw on the 4 hour right here to the upside was just a fake out. So it's hard to identify fake outs when it is happening, because if we knew it was a fake out, we wouldn't have bought it. Now we know that it is a fake out because it breaks structure to the downside once again. So now we have new key levels. We have this 4 hour support, which now turned into a resistance. And we can even mark out this level right here, which is close to the daily, or even this open close level here. It was used as a support multiple times, so it can be used as a resistance. Now let's go to a lower time frame and see if we can get in on a sell move. There it goes. Price has now gone inside of the key level and you can see it moving lower. Now this is not the exact confirmation, but we can see a sweep of a swing high and we can see how price traded through this fair value gap here, which can also be used as a confirmation. Now I'm not going to take the trade, I'm just showing you. This was a bullish fair value gap and now price has traded through it. So now it turns into an inverted fair value gap, and price is also closing below the new 4-hour key levels. So this could be a new trade. Now I have seen all of this price action, so that is why I'm showing all of this very clearly. But when this was happening in real time, I wouldn't have taken this. So if we are taking this trade, the first target can be the Asian low because that is the closest liquidity pool we have. And look at that, it starts moving lower. That's going to be another trade. So now it looks like the bears are starting to step into the market and we can see strong bearish moves. So if you are still holding this trade, the next targets can be this Asian low and eventually this daily support right here. So that day is now over. We took a loss trying to fight the direction which we didn't know at the time, and then we go to the daily. So that day is now over and we have new key levels which are here. This was a support, but since price has closed below it, now this turns into a resistance, and the next one would be here. There's going to be another one, and if price keeps on moving higher, another key level would be this open close level right here. We can mark that out, and if that fails as well, we can pay attention to this. So you can have all of these marked out, but you're not going to take direct entries from any of it. You're waiting for a confirmation on lower time frame like I just showed you. So there it goes. This is during the Asian session, and look what happens. It goes into the daily resistance, it closes below the daily resistance, and it has created a new key level on the 4-hour, which is this open close level. And that key level was created as a result of the rejection from the daily resistance. And the next key level is right up here. It might have gone into a premium price of this market structure leg as well, because this is a lower high, this is a lower low, this is a new lower high, and this is a lower low. So we could expect a new lower high and a new lower low, even down into this. So let's see if we can do the same exact thing. Price has closed here. We have a new resistance. So if we can get a trade during the London session, that will be great. During the Frankfurt session, you can see that price has gone into the 4-hour key level and it's moving down lower. We have a new key level on the 1-hour time frame where the London session might react to, but this is a strong move to the downside. So let's wait and see. Yeah, it has now taken out the Asian low and it's starting to pull back. So we might have to wait for another confirmation, because since a major liquidity pool is taken out, since sell stops are ran out, they might even run into buy stops which are above the Frankfurt highs. So we may have to ignore this trade. And now a new 4-hour candle opens. So we go back to the 4-hour, and on the 4-hour time frame we have new key levels which are here, and the daily resistance is up here. So let's see what price is going to do. I'm going to wait for the New York session. Now this is during the New York kill zone. We can see that we are currently inside of a key level. We're also above the Frankfurt highs, and we're inside the daily and the 4-hour key level. So let's see if we can get a confirmation. Now we wait for a break of structure very patiently. Now this would have been a confirmation, because on the line chart we saw a high low, and a high, and a breakout, but we're above the key level. Price has to close inside the key level for us to know that it is a confirmation. And there it is. We're getting the break of structure even on the candlestick chart. We had a high low, and a high, and a break of structure here. Price has taken out the liquidity from the Frankfurt highs. It has closed below the daily key level, and structure is broken right here on the candlestick chart itself. So now you have your confirmation. Everything is ready. So the next thing you can do is look for an entry. So when price starts pulling back, you can once again draw your Fibonacci and enter at least around the 50% area. Stop loss goes above the high that wiped out the liquidity, which is up here. That will be around 100 pips. You can take your first partial down here at the London low, or even at the 7 a.m. low, and the rest can go into the previous daily low, which is right here. So let's see what happens. We are currently in the trade. The limit is now activated and price is moving lower. We also have a new 4-hour candle. So we see a rejection of this 4-hour open close level, and we go to the 1-hour time frame. And on the 1-hour time frame, a new key level is created. You can call this an order block, because this is the last push up before the push down, or you can even mark this open close level out, because that's the newly created level on the 1-hour time frame. So let's see what price does. Taps exactly into that 1-hour open close level, and then it starts moving low. So this is where you move it to break even, and this is where you take your partials and you let the rest run. And then another partial can be taken right here, and the rest can go into the external range liquidity, or else that daily support we had here. So you can see that you can't take a trade here and hold everything down into this because you don't know if price is going to reverse after taking out the next pool of liquidity or if it is going to reverse from a support. So the best thing to do is pay yourself, move the trade to break even and let the rest run into the next target. And if price is showing no signs of reversals, maybe you can trade your stop loss into that area and then hold it. Don't just hold it for the sake of holding it. Now it starts moving lower and it comes down into the external range liquidity. Everything started with this market structure break. We had a high, we had a low, we had a high, and then we had this breakout structure. So most of the trades were based on this breakout structure. Yes, we made a few mistakes somewhere here trying to buy it, but that's okay. All of us make mistakes. And after this break of structure, price ran into a small consolidation here, which we still traded. And around 2 or 3 days, we had no trades. But when we start getting the confirmations from a high time frame key level, that is when we started looking for shorts. So I hope you now have a basic understanding of how a top-down analysis is done. There will be more videos where we go deeper into this, but for now, use this as the foundation. Go back through the old price section and backtest the same process on your own. Start from the higher time frames like we did, mark the important key levels, work your way down and see how price reacts around those areas. The more you do this yourself, the easier it becomes to understand what you're actually looking at in real time. Don't just memorize examples from this video, try to find the same ideas on your own and understand why they worked or why they failed. That's how you slowly build confidence in your analysis. In the next lessons, we'll keep building on this and go deeper into how I use top-down analysis in real market conditions. But for now, practice what we covered today and get comfortable with the process. I'll see you in the next one.